Yo, what's going on, guys? It's Shinobi. So today we're going to be talking about how you can build a watch list and actually use it to be profitable rather than just taking someone else's watch list and relying on someone else in order to make your own trades. So hopefully this video is going to help you guys. Make sure you watch to the end because there's a lot of parts in this video that I'm going to be explaining and teaching and elaborating on that you might not see, anywhere else. So this video was made with the help of Adam Silver Trades. He, he's a great guy. He makes a lot of watch lists and he's actually helped me throughout the months. So definitely check him out. I'll leave his Twitter in the description. You guys can check him out, give him a follow, tell him Shinobi sent you. So anyways, guys, let's get started. How to build a watch list. We're going to have around like a 6-step process on how to actually go ahead and build it. And then a 2-step process on how you could go back, revisit your watch list and actually convert the watch list. And then we're going to go back with the 2-step process and learn how you can convert the watch list into actual trades and execute upon it. So starting off, the main types of stocks you're going to be playing. So in this scenario, I'm going to be teaching you guys how to build a watch list for options. So with options, what you really want is you want a stock that has high volume, but also really liquid contracts. So you're able to trade them with size and be able to trade them without having to worry about getting in and out or being down immediately because you bought the ask and the bid is 15% lower. So good stocks are Apple, AMD, SPY, QQQ, things like that, things that have a lot of volume, have cheaper contracts, that aren't really going to really, ruin your chances of profit just because of the bid and ask. Some stocks I would recommend staying away from if you're just starting off are stocks like Amazon and Shopify just because their bid and ask is so wide. And another thing, that's step one, find options with high volume and high options liquidity. And that's your main focus. So number two, what you're going to be looking at is stocks that have a good range that you can play. So I'll give you guys an example. We're going to go on to AMD here. I'm going to go into the daily chart. I'll take off my levels for you guys. We're going to look at how much this stock really moves in a day. And you guys can see each candle here represents one single day because this is the daily chart. This is a very volatile stock. And one day, it went from 160 down to 148. And one day it went from 102 to 109. It has a decent amount of range, which is going to allow you to be able to trade those options for multiple, dollars up and down because it trades within a good range. So that's why I love trading AMD, just because the contracts are super cheap, the contracts have great volume, and the stock loves to have a range and follows through on its breakouts. I personally trade AMD every day for the past, I'd say 5 or 6 months now. And the reason I really like it a lot is because you're able to trade it every single day, unlike a lot of other different stocks. Because there's always a level to play that could break out, always has great intraday setups, and that's just one of the reasons I play this every day. Another great example is Apple. Apple is self-explanatory. You can play the stock every day for the rest of your life. This company isn't going anywhere. It's always going to have a range to play, and it's always going to have some sort of move to make. And the contracts are super cheap. Post-split, before this was a $400 or $500 stock, the contracts were like $300-400. Now it's like at the money you could get them for under $1, which is great because they could load up on contracts and great liquidity, has hundreds of thousands of volume, hundreds of thousands of OI. Great company to play, and I love trading Apple. But this just comes down to, stocks you can trade every day. Now, there's two different things you usually want to have on your watch list. A stock you can play every day that will have some sort of movement that you could profit off of. Another thing is you could play something that's trending right now. Giving an example, you guys could put Tilray on your watch just because the marijuana legalization news we just had, or just because the marijuana news we had last week. Tilray had a nice move up, and now what this is giving us is an opportunity to play a pullback or anything of that sort. So if I wanted to make a watch list here after today for tomorrow, I'd be like, okay, I want to see a pullback to 7.4 where I'll start hopping into calls, and my stop loss would be around 7.10. If it fills this gap down here, my stop loss would be $7. And just because it's a whole number, blah blah, it's a little bit overextended, but that's my bounce area. I'm waiting for it to pull back here so I could play the downside. Or you could have it as, okay, if it breaks above 8.4, I'm going to play the upside to 8.69 and then possibly 9.5, right? That's just a little quick example. And for downside, you could be like, okay, if it breaks this 7.27 level, this inside bar it printed. Oh, actually, what am I saying? So an example could be Tilray. Tilray just had news recently with the marijuana news that we had last week, and this could be something you could add to your watch list just because it's currently trending. So over here, I'm giving the example, we have an inside bar here, and so you could be like, okay, I'm playing the 8.67 break for the upside, and I'm playing the 7.27 break for the downside. First thing you want to do is identify your key levels that you're looking at on the daily chart or the weekly chart. You want to have a top-down approach where you start from the daily chart, move on to to the hourly, then the minute candles, because that way you're able to figure out the overall trend and narrow down, and that's how you should always go about making a watch list. You know, Tilray, we have this inside bar, so then what we're gonna do is you're gonna go and look for different levels you could play. So your levels are 8.67 and 7.27, just in this inside daily bar range, and you look at different levels. So over here, just, you know, eyeballing, we can see 9.5. After it breaks 8.67, it has room to 9.5, right? And if it breaks 7.3, we're gonna see possibly move down to this area of consolidation it had here prior, 6.87. And if it breaks 6.87, we should see a nice move down to 6.3. And then this is how you go about building your watch list. So now the way you guys see it on Twitter, how a lot of people do it, they'll be like Tilray, they'll be like calls 8.67, then they'll put this little thing and they'll be like puts under 7.27. This is how they would write it, right? And this is exactly how you figure out how these furus are making it. You know, watch this video. If you guys have any questions, DM me on Twitter. I'll respond to all DMs. Comment them in the comment section. I'll respond there too. I'll help you guys out. But this is what you're basically going to see these people do. But the great part about building your own watch list is you know why you have these levels. Now, these people that are posting them on Twitter are doing a great job, because what you could do is you could go back, put in those levels on your chart and see why they are there in the first place. So now that you have your levels here, you can actually create price targets for yourself that those people aren't doing. So you could be like, okay, once it breaks 8.67, it has room to 9.5. I'm going to start scaling around the $9 area, just because I know that's going to be a psychological number that's going to have some sort of resistance. Once you make your own watch list, you get to follow your own plan rather than following what these other people are doing. So this is how you play trendier stocks. You know, if you guys need help finding key levels, that's a separate video that I have to make, but this is just going over how you actually go about building a watch list and are able to execute off of that watch list. So my main reason about making a watch list is the reason why you have a watch list is so your energy, your focus is all, it's tunnel vision. You have your levels in front of you. All it takes after that is you see your level break, you see the close above it, then you're gonna play it, right? That's what it all comes down to. That's why people build watches. You don't want to build a watch list and not follow it, because then what's the point of having the watch list? The whole point is so you're able to use it, get rid of all the extra noise, and just focus on something you already built. So that's why you always want to have two stocks that you normally can always play, like AMD or Apple. For you, it might be Tesla and Microsoft or whatever, Spire, QQQ. You always want to have something just in case these levels don't break, because this could print a double inside bar. And then what you want to do, you know, you just want to have those just as a backup, and those are the stocks you usually are going to make most of your money from, because you play those every single day. Now, when it comes down to these trendy stocks, the stocks that you know are going to have volume because they might have had news or something, you know, you want to go and look at the daily charts. If there's not a setup there, don't play it. The last type of stock you want to have on your watch list is a stock that has a great daily chart already. So we're going to go here, we're going to look at different stocks. We'll look at something like QCOM, right? So next type of stock you want to have on your watch list is something that has a really, really good looking daily setup that you know is going to have some sort of momentum that you can play. So in this case right here, we have the example of QCOM. The level 158.61 has served to be a huge resistance multiple times, and I can show you guys right here. Previously, it was used as support, then it was used as support here. You know, you have this resistance right here twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times. So 8 times it is rejected. So QCOM is going to be one of my main watches going into tomorrow, just because of how hard of a level this 158 level is. And if it breaks past it, we are going to see a move to 160 hopefully, and then a possible move to 163. So this is the last type of stock you want to have on your watch list, ones that's daily chart is looking super primed to run, and that you're going to be able to trade very well in the coming day. You know, once you have your level set up, you know, we're going to use the top down approach like I was mentioning earlier. You're going to move on to the hourly, and then you're going to be able to slowly figure out, you know, calibrate your levels and see how it really works out. So over here, I might just adjust it to 158.80 just because it's where it wicked here previously, and have my level at 160. If it breaks 160, I know according to the volume profile, it's going to move towards the point of control, which is around 166. And this is going to be very good because chips are showing strength. And now speaking of chips and certain sectors, if you're playing a stock, make sure you look at the sector ETF. In this case, it's SMH. And if we go into the daily chart on SMH, we can see how it's breaking out right now out of this level. If it breaks past this 279.53 or 280 level, we should be seeing a move to 295, telling us that chips are strong and that our QCOM thesis should play out just because of the relative strength in chips. So once you have your watch list written out, you have all your levels drawn out, you have your price targets written out, I'd highly recommend writing it on a journal. You know, learn your thought process when you're trading your watch list, right? You want to see how your behavior changes when you're trading your watch list. Go back and review what you thought, compare it with what happened. A lot of people talk down on having a lot of lines on your screen, right? But if it works for you, it works for you. I personally think all you need is one line to make millions, because, you know, I've seen people do it. You don't need that much on your charts, but if it works for you, it works for you. Remember, a watch list should be made just for you, not anyone else. So definitely go back, check why you're trading something, see what works and what doesn't. If you're trying to trade QCOM, you're trying to play a certain type of, say you're trying to play like a daily bull flag, right? You know, say you're trying to play a daily bull flag like right here on CAR, and every time you go to play it just doesn't work out. Stop trading bull flags. Stop putting those on your watch list. Trade what works for you and you only, right? Because you're at the end of the day, you're the one taking these trades. So if a certain setup isn't working for you, you see some sort of pennant forming, you see some sort of head and shoulders forming, and it never works out for you, stop putting those on your watch list. Only trade what works for you, whether that be a key level break, you know, a supply zone break, or a demand zone bounce. Whatever works for you, that's the only thing you should be trading. And guys, that's the end of it for this video. You guys can see how we went through making a watch list, where you first start off by looking for stocks, you find a good range, formulate a list of those stocks, go into a daily, use the top down approach to find the key levels to play. Once you have those, you can start writing out your levels and post alerts with them. And what do I mean by alerts? I mean, you put your level down, you right click on it, you add the alert. And what I personally like to do is, say it's Apple and I'm playing 175.87 break like I have written here, I'll put down the 177.5 call and I'll put down the weekly. So this is whenever the alert pops up on my phone, instead of having to think about, oh, Apple, is it calls or puts? All I have to think is, okay, it's Apple 177.5. I'm going straight to the contracts, and I have the chart pulled up on my trading view, right? So that's what I mean by alerts. I don't mean by posting plays. I mean having the alert set. So I'm just going to set the alert. So tomorrow when it breaks this level, I'm going to have the confirmation bias, and I'm going to have the alert ready to tell me, hey, these are the contracts you said yesterday you were going to play. So it takes less brain power for me to think of what I'm going to play the next day. And last but not least, we talked about how you're going to go back and look at your watch list, look at how they actually played out, and which patterns work for you, which ones don't, what kind of key levels, and what you really need to work on. Because every single day you could slowly critique your watch list to slowly become better and better, to the point where you trade nothing but your watch list. So if you guys have any questions, DM me on Twitter, let me know you're from the YouTube video, and then I'll help you guys answer your questions. Send me your watch list. I want to look at them. I want to see what I can do with them. And, you know, maybe I'll start taking plays from you guys. You guys never know, you know? Send me your watch list. I'm going to look over them. I'm going to look at those levels. I'm going to see how they react. I'm going to help you guys out. All for free, obviously. This is on my Twitter. If you guys enjoyed this video, make sure you drop a like, comment, subscribe. And hopefully you guys enjoyed. And, yeah, I'll see you guys in the next one. Peace.